be seeing in the last few trading sessions. Let's talk about one of the other stocks on our radar right now. That's IndiaMart, Intermesh. It's rallied about, 36% from the recent lows that we've seen on the stock. The founder of the company, Dinesh Agarwal, joins in to tell us more. And this after they have given their outlook of doubling their business by 2027. Thanks a lot for joining in. That's the long-term plan that you have. 2027, you want to double your revenues, take it to 2,000 odd crores. But in the here and now, can you give us a sense of, the quarterly run rate that you're tracking? 250 crores is what you've been doing for the last couple of quarters. Does that sustain? When do you go to 300 crores by? And the margins, you said the previous quarters, margins had bottomed out. How much is the improvement that we can foresee from here?
Yeah, so on the revenue front, you can take the guidance from the collections from operation and deferred revenue. If you see the collections from operation, customers have been growing, and last quarter it was 283 crores. And deferred revenue has also been growing at upwards of 25%. So we can expect this similar revenue growth in coming quarters on the revenue as well. On the EBITDA or margin side, as I said, we have been investing behind the growth in terms of manpower, in terms of technology, and probably we are going to bottom out soon. And then we will start to increase as earlier, slowly and slowly towards 30-35% range.
So you're saying you haven't bottomed out yet. There is some further downside to margins still. How much could that be according to you?
No, there could not be much. Maybe, quarter four is always less margin, more collections. So that is what is a seasonal thing. But other than that, I think from, probably the quarter one next year, we will be trading at the similar 28-29%, and then we'll probably start to move.
Okay. All right. Hi, Mr. Agarwal. Good morning. Quarter four, normally you'll pay out those incentives to your sales force as well. So sometimes I think that's the impact that you see in quarter four on margins. But going ahead, the broad headline is you move from an annual run rate of around 1,000 to around 2,000 crores. That's by 2027. Split this up for us. That means that you have to grow at a CAGR of close to around 25%. How much of it will come in from higher ARPUs? And how much of it will come in from higher subscription, paid subscribers?
If you look at historically, our paid subscribers have been growing in the range of 15 to 20% on a longer term basis. And ARPUs have been growing in the range of 5 to 7%. So we can expect a similar kind of revenue growth of about 20 to 25% in the times to come, given that in the past year we had good collections and good revenue increase.
All right. Briefly you mentioned when Mangalam asked you about your margins, you said that after this, you gradually start moving to the early 30s, if I got that number correctly.
Yes.
For FY24, what sort of a margin number will you guide for? Let's keep quarter four at the side. We don't want you to get in trouble with SEBI, and we don't want us to know anything about the quarter that's gone by. But from the outlook from here on, for FY24, what is the broad margin band? Should we work with the number closer to around 30%, maybe 28 to 30%?
Yeah, I think we will target 30%. Let's 30%. See, 29 or 31, I cannot comment, but let's target 30%.
Right. You said that of the 25% CAGR that you're projecting, 80% would come from member additions and the remaining 20% comes in from ARPU growth. What does that leave the room for acquisitions, inorganic opportunities, and your current acquisitions to scale up to? I mean, are we looking at, is there a plan that you have for a certain percentage of revenues coming in from inorganic acquisitions as well?
So if you look at the Busy acquisition, I think we are doing well on that. Busy has been growing at 10 to 15% before our acquisition. And now we have been able to increase the growth rate to upwards of 20%. And I think we will continue to maintain that. As you can see, we generate healthy cash margins, and we continue to look out for good opportunities in M&A space. Let's see if we find anything as good as Busy in going forward.
All right, Mr. Agarwal, you'll end this year, I think, closer to around 202,000 paid subscribers, very roughly, early 200,000 odd. So going by what you're saying, for FY24, you should end with a number closer to around 245,000, around a 20% growth on that base?
I mean, I've been guiding that we will
8,000 per quarter.
Yeah, 8,000 per quarter. So about 230, 235 we can assume.
235,000. So we've got a couple of numbers from you. One is the paid subscribers will at least go to around 235,000 with margins closer to around
30 to 35. Yeah.
30. Okay, we'll keep it in that band with margins closer to around 30%. Now,
yes.
Out of your total pie, how much of it will come in from this inorganic growth? You've done a few acquisitions, but how do you see, I mean, what is the current contribution? And those acquisitions are growing at a faster clip, right? So what will they contribute in the coming years?
There's only 200% acquisition that we have done. One is the lighting, which is in very, very early stage. It is in the product market fit time. And the other one is Busy, which is doing about 50 crores of revenue. So you can add that 50 crores of revenue, which is already being added in this financial year. So from next year, I don't think you will see any additional growth coming in.
Okay, and what is the current cash in the books?
The current cash in the books is about 2,000 crores.
Around 2,000 crores. So what do you use it for? Will you, if you're done with your acquisitions, will you look at some kind of money being returned to shareholders? I asked you this the last time as well. But is that the plan?
We have been guiding that we will split our collections into two different things. One is the investment and M&A. The other is the return to shareholders. And we'll continue to do that.
Just a couple of questions before we let you go. This is the other important aspect of your business, which is suppliers. Close to around 7.4 million right now. By when do you hit that 10 million mark? What industries are you targeting your suppliers coming in from? And, paying subscribers close to ARPU of close to around 49,000 seems like you will easily cross 50,000 plus the next year. Where does that number settle?
So in terms of number of suppliers, these 7 million suppliers have GST and non-GST both base. And if you look at the overall GST registered suppliers in India, they are about 1.3 million or so. 11.3 million, 13 million or so. And out of that, I think we have still gotten less than 20% on our platform so far. I think there is a lot of headroom to grow there. I cannot give you, but we have been growing at about 1 lakh subscriber every month, 1 lakh free sellers every month or so. And I think the similar trajectory, if we continue to grow, I think we should be heading towards 8 million next year and then so on. Depends a lot on India growth story and as well. And in terms of the paid subscriber, we have only grown recently very heavily. And I think that percentage growth might reduce. But as I guided, we will continue to try to add about 8,000 per quarter.
All right, running out of time, not out of questions. Mr. Agarwal, we'll leave this for another opportunity to interact with you, perhaps after your fourth quarter numbers, and then we'll detail about other things, including competition as well. Take a